Welcome to Cross-Border Tax Talks, where we discuss the latest trends in international taxation, from U.S. transfer pricing to the OECD's latest developments. I'm Doug McConey, PwC's International Tax Services Global Leader. You can watch these podcasts on YouTube at youtube.com/Doug McConey. On this week's episode of Cross-Border Tax Talks, we're back in Washington, D.C., in PwC's Policy on Demand studio, where I'm excited to have Alex Voloshko and Christina Novak on the podcast. Christina is a transfer pricing partner in PwC's Washington National Tax Service practice. Alex is an international tax partner in PwC's Washington National Tax Services practice, who leads PwC's value chain transformation practice. Christina and Alex, welcome to the podcast.
Thanks for having us.
Well, Alex, welcome back. It's been a while since you've been on.
It's good to be back.
Christina, this is your first trip here to the Cross-Border Tax Talks and Policy on Demand studio, so welcome.
Thank you.
Did you have any issues getting here? I think you're Dallas-based and flew in. Any travel woes?
Surprisingly, no. I mean, I have had my fair share of travel woes, but surprisingly, no. Everything was actually on time and everything was fine.
Yeah, I think for a number of us consultants that travel around a lot, and I think this is not just unique to the US, but also in Europe, just the number of delayed and canceled flights that I've been dealing with have been very, very challenging. I actually, surprisingly, was able to get here without any delays. And Alex, I know you've suffered from some of your own travel woes as you've been moving around.
I had an episode last week. I was in New York and the US Open was going on, and my hotel did not let me in, and the hotels were sold out. So I was wandering the streets of Manhattan.
Did you just sleep on the street?
I ended up taking a 6 a.m. flight, and I just wandered the streets, and then I went to the airport, did work. But
well, the life of a consultant and tax advisor.
For sure.
So really excited to have both of you on to talk about a very important case that recently came out in the transfer pricing area, and wanted to kind of spend some time talking about the Medtronic decision and really kind of why the case is so important. And then also spend some time talking about what are some of the trends that we're seeing in transfer pricing. And then really, Alex, what are some of the business trends that we're seeing with taxpayers and just major transformation that's occurring for a number of different reasons, including the pandemic and geopolitical, and really tie those together. But Christina, I thought we'd start with the Medtronic decision. And can you tell us a little bit about that, kind of from a basic facts, procedure, rulings, kind of inform our listeners about Medtronic? And we probably don't spend enough time here on the Cross-Border Tax Talks talking about transfer pricing, and so go slowly for some of us.
I will. And this is a huge case in the transfer pricing space, and we've been waiting for a while for the decision to be released. And so let's walk through the facts of that case. So this case involved a license. It was a license of technology IP from the U.S. group to the Puerto Rico foreign affiliate. And that IP was used by the foreign affiliate to manufacture medical devices and leads. And these were life-saving, life-sustaining, implantable, Class 3 medical devices. And the tax years at issue were 2005 and 2006. And so the question before the court, of course, is a Section 482 case. The question was, well, what is the arm's length value of that IP that was licensed to the foreign affiliate? This case was on remand from the Eighth Circuit, so it has kind of, quite a bit of procedural history, I guess.
Yeah, so it went from tax court to Eighth Circuit back to tax court.
It did, yes. And so this was the remand decision. It came out a couple weeks ago in August. But essentially, the headline of the case is the court ultimately rejected both the taxpayer's methodology and the government's methodology. And she ended up going with a unspecified methodology. And I guess just to back up a little bit to tell you about both of the methodologies that were proposed. So the taxpayer went into the court and they used a comparable. They used, which is what we call in transfer pricing, a cut. Yeah, so the taxpayer used a cut, and they looked at this pacesetter agreement. So the pacesetter agreement was this litigation settlement agreement that the taxpayer had entered into with its competitor, pacesetter. And they based their royalty rate on the royalty rate that was charged in the pacesetter agreement, and then made some adjustments to account for differences between that agreement and the IP that was licensed in the Medtronic case. So that was the taxpayer's position. The government's position, they used, as you had mentioned, the CPM. So that's the comparable profits method. It's a profits-based methodology. And what the government did is they looked at benchmarking that routine manufacturing activity that was performed by the foreign affiliate, benchmarking that against comparable companies, and then saying, well, this profit that's earned by comparable companies performing similar activities should also be earned by that foreign affiliate. And so those were it was sort of this battle of transfer pricing methodologies. That's kind of what this case was about. And if you had been following this case, it's kind of not surprising, the ultimate result of this case. At the very end of trial, Judge Kerrigan had said that she was bothered by both the taxpayer's position and the government's position. And she was looking for a way to sort of bridge the gap between these two different arguments. They were quite far apart, and she was wanting them to come up with maybe an unspecified method, or perhaps averaging these two methods. And the taxpayer ultimately took her up on this. And the taxpayer, in their post-trial briefing, they presented an unspecified method, and which looked a lot like a profit split method.
Okay.
So essentially just valuing what are all the routine functions, let's value that, and then the remaining system profit, we're gonna end up splitting 70-30, 70 in favor of the US group. And so the court ultimately agreed with that methodology. She changed a little bit of it, the final profit split. But yeah, that was the ultimate conclusion of the
How
court.
common is it for this kind of unspecified method? In other words, do traditionally taxpayers, take the cut? I think that's the
Right.
and is this, so how unusual is this kind of as we think about advising taxpayers, from the obviously a profit split versus the CPM versus the cut?
Right, it's actually very unusual. We have not really seen this in many cases at all. Profit split, of course, is very common. It's also very common for the government to argue CPM in a transfer pricing case. But yeah, like the fact that this ended up being an unspecified method in and of itself is surprising and not something that we normally see.
So is that something that taxpayers, I mean, as we think about kind of, why is this case so important and what are some of the takeaways? Is this kind of unspecified method now something that the taxpayers can potentially rely on or look at for purposes of determining their own transfer pricing methodologies?
Yeah, I mean, I think after this decision, absolutely. Now we have a basis for it. We have something that they can point to. And I do think it sort of opens the door for relying on this type of methodology. So yeah, I think we might be seeing that in the future.
Yeah, and I think, Alex, one of the other lessons is from this is that the CPM, which tends to be the government's position, right? Commonly when we see these transfer pricing disputes, particularly where we have a U.S. licensor and a related party foreign licensee, is that the CPM may not be applicable to all foreign licensees.
Yeah, I think like in this case, both the government and taxpayers will undoubtedly learn a lot from like decision and the way they played out. So like we always say, like, so is this a good case or is this a troubling case? Like I would say it's generally on balance probably a positive case. Like I can certainly think of a number of things that are encouraging about this case, and we'll talk about some of those in a minute. But I think, like, make no mistakes that both sides of the controversy will learn the lessons, and Christine, like you said, I think maybe we'll see more unspecified methods in the way companies, justify the pricing intra-group, but I think we also going to see IRS probably do their CPM analysis, with more rigor, because I think Judge basically kind of invited the IRS to propose like other adjustments to the CPM methodology, and I'm sure we're going to see that in controversy going forward.
Absolutely.
So what are some of those important lessons, Alex, and things that we can take away from this case, and lessons that taxpayers and advisors can learn?
I'll name a few, and then Christine, I'm sure you have your one as well. So like for me, so number one, this case, as Christina, you said, it was relating to a medical products company. But I think, the case, the law being discussed, and the findings will resonate just across industries. So like the first takeaway is, don't be mistaken, this is not just for medical products companies. This will apply just across industry spectrum. The other thing that I took away was it was encouraging to me that the tax court, the judge, clearly spend the time understanding the facts and the industry features that are relevant to the case, which is not always the case in the controversies. Like one of the things that we always find worrisome when these kind of matters make into controversy is that the venues don't always take the time to understand the facts, the nuances. A lot of times there's just knee-jerk reaction, and something gets
results-oriented
exactly.
decisions.
And there's a lot of examples.
There's a lot of examples. Of
yes.
that.
So this was encouraging to me that the judge really took the time and to appreciate the industry, the company, the types of products, the type of value chain this company has, and what really matters, what kind of risks that are on the table. Christina, you said there's life-saving devices, regulated medical products. There's various regulations that control the supply chain and the things that the foreign licensee had to deal with. So to me, that was really encouraging, and it just underscores once again how important it is to be tuned to the business facts and really build a narrative that is firmly grounded in business reality as we understand it. The other takeaway for me was, there are many ways to make IP available between members of the group, of which license is one. There's certainly others. There's a sale. There is cost sharing arrangements. There is all kinds of things. This is a good reminder that we have to be really bespoke in the way we design IP arrangements within the group, and with the right facts, licensing could be a really viable way to make IP available to an affiliate, and it drives appropriate sort of arm's length economic results. So those were just some of the takeaways. And similarly to some of the other controversies relating to transfer pricing, we saw in the last 12 months, another big theme here was good housekeeping is really, really important. Knowing your facts, having the agreements be corresponding to the reality of what's actually going on between the parties and the behaviors, making sure that as we are preparing different papers that deal either with transfer pricing or tax positions, those are sync up and they tell similar stories in a way that's consistent. So that good housekeeping is really, really important. And then just in general, I keep, as I see these cases or these matters come up, I just keep reflecting on the fact that the world has been changing so rapidly and so significantly that these arrangements, like Medtronic case is an example of that. We're talking about controversy relating to 15 years ago, right? And
right.
At that time, the comparable transactions that were being used probably were a few years before that. So we're really potentially, it's like a window into the past, if you would, right? And so I think one thing we have to take this case and the law that it created and just kind of transpose it on today's commercial reality and say well, if this were in controversy today with some of the things that are happening in the world, how would this get resolved? So I think there's a lot of really interesting kind of takeaways from this case.
Yeah, and Christine, I want to come back to you and get kind of your views, particularly on economic substance and the need for corroborating analysis. But I did want to just highlight one point you made, Alex, that really resonated to me as far as the alternative kind of methodologies or things that particularly U.S. taxpayers can do to make IP available to their foreign affiliates. And you had mentioned licensing, sale, cost share, and kind of a number of kind of things in between. One of the things that I'm very interested in, and we've spent a lot of time on the cross-border tax talks talking about Pillar 2, so I would be remiss if we didn't at least mention Pillar 2. I can foresee a trend in light of Pillar 2 and in light of the way the rules are structured, and that transfers of IP post Pillar 2, so after those rules get enacted, and if they get enacted, I guess I should say, generally would cause globe income if you are transferring intellectual property between two taxpayers, which could create a very horrible result depending on whether it's the income inclusion rule or the UTPR. And so the reason that I mentioned that is that it seems in a post-Pillar 2 world that a licensing model, and potentially cost share too, will be much more prevalent, I think particularly for US taxpayers than we've seen before. And then the issues that obviously have been raised from Medtronic and some of the lessons from that in other cases are going to be even more important in a post-Pillar 2 world.
For sure, I definitely agree with that. I mean, so there's a couple of things there, Doug, that are interesting to maybe unpack a litted bit, and Christina, I'll be interested in your views as well. I think, well, one is, yes, I agree. I think licensing is certainly one of the viable ways to make IP available, and not all licenses are created equal. Like, licenses can have particular features that are relevant to a particular industry or the situation, and those features can really drive the result in a very significant way. So, for sure. The other thing is, there's just a myriad of tax considerations that go in just selecting what's the right way to make IP available across members of the group. And Doug, you've touched on a number of these in your prior podcasts, but it's withholding taxes and foreign tax credits and the impact on utilization of attributes, and it's base erosion anti-avoidance tax, and it's like how would that IP be commercialized, and the Subpart F income, and other U.S. tax considerations, and then of course as you said, Pillar 2. So I think all those things need to be thought through very carefully and methodically, and then beyond just the technicals, also thinking about just the controversy profile, as well as reputational considerations around what's the IP, what's the business arrangement, what would this look like in the newspaper, to an audience that's not necessarily savvy in the tax rules. Like, does this kind of pass the smell test? Just some of the things.
Yeah, and Christy, what are you seeing in light of particularly Medtronic's facts? I think really lent themselves with the economic substance and that corroborating analysis.
Yes, I think we're going to see a lot more of the use of these corroborating analysis. And one thing I wanted to go back on, one big takeaway from this case is that the court actually respected the contractual risk allocation that was in the intercompany agreement. And I think that was huge. I think a big part of this case was being able to prove that the government CPM was wrong, and it was wrong because it didn't account for these non-routine contributions. And those non-routine contributions, which, as you were saying, facts really matter in these cases, but those non-routine contributions included the substantial product liability risk that the foreign affiliate bore, and that was allocated in the intercompany agreement, and then that was supported by the economic substance. And so the court had looked to, did the foreign affiliate licensee, did they have financial capacity to bear that risk? And then also, did they have the managerial and operational control over that risk? And the court said yes on both aspects. And I think that was really key in this case.
Yeah, I mean, I'm just going to pile on that because I think that has been a challenge, I think, for advisors as well as taxpayers, is that, well, this is all one parented group. Like,
right.
How can risk really be allocated if ultimately that risk is at the parent company? But the contracts matter, like how risk gets allocated amongst those members, which is the whole point of transfer pricing.
Right.
And I think it was encouraging to see the court respect that.
Absolutely.
So maybe kind of along those lines, we're certainly seeing, not just in the U.S. but across the globe, fiscs looking for more revenue. Right, and transfer pricing always, seems like a ripe area for taxing authorities to challenge taxpayers. Christina, maybe you can tell us about, what are some trends that you're seeing? And I appreciate that this case is over 15 years old, which tells you something just how long this stuff takes to kind of get litigated and through the system. So certainly, to Alex's point, a lot has changed in that time period. But as we fast forward here to 2022, and you had mentioned that this case came out in August of 2022, what are some other trends that you're seeing from a transfer pricing perspective, both in the U.S. and outside the U.S.?
I think probably one of the key trends is we're starting to see a lot more coordination among all the taxing authorities. I mean, I think It's probably not surprising to anybody listening to this podcast, but I do think that we are starting to see that. And, even with respect to US controversy, there's now been a massive influx of funding, right? Like the IRS now has $80 billion that's been allocated to it. Just slightly more than half, I think it was 45 billion, is for tax enforcement.
From the Inflation Reduction Act that was recently passed. Yep.
Yes. And so I think all of this is going to create a lot more controversy, a lot more litigation, and I think part of that is always going to be transfer pricing. Some other things that we have seen is just there's always a lot of IP, whether it's IP licensing, whether it's cost sharing. Those tend to be the areas that we see a lot of controversy in, particularly in the United States.
Alex, what about you? What trends are you seeing more, and from the international tax perspective, and as companies are looking to set up those arrangements, and then particularly as they get challenged, what are some of the trends that you're seeing from a controversy perspective?
So I think of a term, operating model, and we've talked on your podcast a little bit about the definitions and what does that mean, but I step back a little, just even beyond, transfer pricing, which is critical, and it's the economics that kind of threads the intercompany arrangements. But broadly from, operating model perspective, so meaning, an entity structure, intercompany transactions, arrangements, the way they're delineated, the way they're documented, and then how those transactions are priced, all that sort of comprises operating model. The big trend now is taxpayers are, or if they're not, they should be actively just rethinking whether their operating models are fit for purpose. Just given what's going on in the world, given what's going on within their own businesses, within their peer groups and their industries, as well as in light of some of these controversies and reputational ramifications. So what I really find is many of those models are, they're dated, frankly.
Right.
They're dated.
Ripe for controversy.
They're ripe for controversy because they either out of whack with just commercial reality of what's going on, or the business has evolved. We see numerous examples where just the value proposition of a company had changed. It changed from selling products to maybe selling more digitally or cloud delivered services, or, there's new offerings that are made available, or new internal capabilities that are really, really economically significant, and the existing operating models don't really, account for those, valuable internal capabilities. So those are all examples of the reasons why a lot of these, operating models are not fit for purpose, and they either, cause risk, controversy risk, reputational risk, or, tax or cash flow risk, frankly. Or they just suboptimize because they don't really capture kind of the true nuggets of economic value that exist in the system.
So in light of those, and to your point, geopolitical changes, in light of the pandemic, in light of just the way businesses are moving, and we're going to unpack that a little bit, talking about some of the transformation initiatives, and I know how you feel about that word and kind of just being overly broadly used, but we're going to unpack that a lot. Just a lot of change taking place in the world today as well as in industry. I guess, Christine, what recommendations that would you have from a transfer pricing perspective? Because, Alex, to your point, kind of re-examining the operating model and looking ways to optimize, or frankly not even optimizing, de-risking, frankly, the operating model from a tax perspective is very important. What are recommendations that you have from a transfer pricing perspective, kind of particularly in light of the Medtronic case and some other cases that have come out? What should advisors and taxpayers be thinking about as they're looking at these kind of maybe old and cold models as Alex described?
Right. I think they need to reevaluate, right, as you said, I think they need to reevaluate these models. But, transfer pricing, it's all about functions, assets, and risk. That's the heart of what we do. And so understanding where are those functions, who's incurring those functions, who's incurring that risk, and being able to, as you so lovely put it, creating the narrative, making sure the facts are in place and it actually aligns with your allocation of income across the multinational entity. I think that's very important. It's important to have all of this documentary evidence in place. all of your intercompany agreements, your transfer pricing policies, and your transfer pricing documentation, making sure all of that aligns, and it also matches the economic substance. It matches the facts on the ground as it's actually being implemented. And one thing I wanted to add about that was, in terms of your transfer pricing documentation, taking a look at that again as well and making sure that's robust and that actually reflects your transfer pricing within the group, because we do transfer pricing documentation for penalty protection purposes, and the IRS has come out and said, it's not enough that you just have it in place and you provide it whenever it's needed. It also needs to be adequate and it needs to be reasonable. And so I think it would be wise to revisit those and just make sure that they are robust. And I guess one other thought on this is to consider an APA. That's another. An advanced pricing agreement is another opportunity to gain certainty in your transfer pricing.
Is that something that you're seeing more of a trend for taxpayers with APAs, and I presumably not just with the US, and then there's kind of the unilateral APAs and bilateral APAs, but is that a trend
we
that
are
you're
starting to
seeing?
see more of that, yes. And I think companies are realizing, yes, it's important to obtain this certainty around your transfer pricing, and it's really only one of the only ways to do that. So,
Yeah,
yes.
and particularly you had mentioned the taxing authorities are sharing a lot more information,
Yep.
right? And then I think the other thing that we can learn from Medtronic is that the IRS and the government has the benefit of hindsight,
right?
With respect to are these, the relationships, the risks, the agreements, the government, not just the U.S. IRS, right? Taxing authorities have the benefit of hindsight. And so the ability to be able to get these advanced pricing agreements, whether it's the U.S. or other taxing authorities, certainly reduces that risk for taxpayers.
Absolutely.
And frankly, this is where that funding is actually good news. Like the funding the governments get.
The U.S. funding for the IRA.
Same with the foreign governments. Like a lot of that funding goes into upskilling the capabilities that the taxing authorities have, and so I think that's generally a good news, because we're always better off when there's kind of more sophistication, understanding of the rules, the business nuances, use of technology on both sides, the taxpayer and the government.
Yeah, it's a really good point, is that I think all of us, whether as advisors or taxpayers and policymakers and governments, like the more sophisticated and the better the understanding of these complex
sure.
arrangements,
we're seeing this
the
over
better.
and over again. Yeah.
And sort of raising the boat is really
Yeah.
important.
I just want to add one last thought, not to pile on, but this point
please.
about, you guys talked about transfer pricing documentation and the word narrative. The one thing I just want to make clear, like telling that narrative and the story is really, really important. But by that, we don't mean like making things up. So I think narrative can have like a bad connotation that we're trying to spin something. What really we're talking about here is a lot of the matters that are in question here are very subjective, and how you tell the story, how you string together the facts to explain, the result is really, really important. So just being able to kind of unfold that narrative and explain it in a way that is understood is really important, and that's something that just requires a special skill set. And then the second quick point on documentation I wanted to make, and this kind of relates to some other tax court controversy that happened last year, and you discussed it in your podcast, Doug, is it's really, really important that we, as different subject matter specialists, team and talk as we're advising taxpayers, so we don't have things where, transfer pricing report says one thing or describes something in one way, and then, a tax planning memo and opinion refers to it in a different way. It just creates inconsistency and confusion. And so it's really important that all those pieces of documentation kind of interrelate and string together. They've all been read by the same folks and, are aligned. It's really, really important.
Yeah, it's a great point, and your point on the narrative is good, because I think that can be construed potentially as a pejorative term.
Right.
But I think one of the narratives, I'm going to continue that theme, is that we're seeing really, and we mentioned this earlier, I wanted to unpack it a little bit, sort of unprecedented change from a business and operational perspective. And the word that likes to get thrown around a lot is transformation, right? Which is a broad term that can apply to a number of different areas of business changes. But I think, three of the big changes that I'm certainly seeing amongst taxpayers: supply chain changes, and a lot of this has resulted because of, it started with the trade war, the pandemic, just major geopolitical disruption that we've seen over the last few years. Cost transformation, so companies really looking at it, particularly given the state of the economic environment, and if there is a pending recession, and I am not an economist, but you can already see, and kind of what's happened with the stock market, maybe reflective of companies now really starting to look at cost transformation. And then the third piece I wanted to spend a few minutes talking about is digital transformation, as U.S. multinationals and non-U.S. multinationals really look to transform their businesses. And obviously transfer pricing plays an important role in each of those. And so I thought maybe, Alex, we could start with supply chain, because I think that's very, very important. And I think even as a consumer, right, I hear a lot from people, contractors, like, oh, we've got supply chain issues. I'm like, yeah, I'm aware. I do that a bit for a living. But maybe talk about kind of from a supply chain perspective, and then really layering on kind of how transfer pricing plays an important role in that transformation.
That's a very loaded question.
It is.
I'm going to try to go fast. So I'll highlight some of the things that are happening as regards to supply chains, and then maybe Christina, I'll ask you to do the so what, like from the transfer pricing perspective. Here's like one way to kind of demystify a little bit the supply chain transformation of what's going on that you mentioned. So you referred to trade wars, pandemic, and then you can add to that list, right? There is commodity crises, there is war in Ukraine, there is just the general geopolitical, there is the situation with China, there is the ESG, like all those things just piling on. And so when we're talking about supply chain, simplistically, companies' ability to plan, source, make, and deliver goods or services into the markets, right? That's really what we're talking about here. That system, that supply chain is under tremendous stress for like every single company. And companies are not just sitting and watching that happening. Like well-advised companies are actually taking active steps to rethink, reinvent the supply chain, make it more resilient. That's the big word, so the resilience of supply chain. So what does that mean? So this is where it's really important that we kind of set aside the consultant talk as much as we can, and like it's really hard to do given what we do for a living, but just really getting into the industry and the facts of the company, because the way companies experience that supply chain crisis, if you would, the transformation, and what they're doing about it can be really, really different. I'll do maybe two really simple examples. In one example, think of a technology company. So it has very complicated product. Maybe it required a dedicated, sophisticated production facility. Semiconductor could be a good example of the industry, right? Mm-hmm. And then the company supplies that product into other business, buyers. So that particular company is very much tied into its manufacturing footprint. It has that capacity it built, and now it's dealing with maybe shortages of raw materials for its product, and it's dealing with just really difficulty in kind of modulating supply, because it has one asset, it's really invested in it, and it cannot really buffer, the capacity because it has that plant, and it's really having a hard time sort of between shortages of raw material commodity on one hand, and then crazy demand sort of on the market side of it. And so that particular company is dealing with just very unique set of issues. Then on the maybe other end of the spectrum, think of a consumer products company that is sourcing, gazillion SKUs for products, a lot of them historically sourced out of China and bought from, 10,000 of smaller, medium-sized suppliers. This company does not have a lot of visibility in its supply base. Traditionally, it's all been about cost management, all the way in the supply chain. And again, just think of the consumer products company like that, and it's dealing with all the issues around China and just trying to kind of diversify its country of origin. It's trying to get better visibility into its suppliers, trying to manage the matching of demand and supply better. Those companies deal with very different issues, and what they're doing about it is also very different. So to me, like the big takeaway is we need to get sort of beyond just pure labels and sort of consulting lingo that's being used, but really understand like what is the industry, what is the type of company, what is its product, the way of engaging with suppliers, the sophistication of its internal processes, what is it dealing with, and from there we almost every time see there is significant investments being made in particular solutions or ways to remedy. We're seeing very specific types of risks that that company wrestles with. You know, like in my two examples, the risks they're dealing with are very different, and what they're doing to manage those risks and, you know, what those costs translate to could be also very different. So then maybe Christina,
because
overlay,
those
what does
risks
that mean,
may
right?
not have been the same when the original transfer pricing methodologies were established.
Absolutely, absolutely. And as I had said before, I mean, the key piece of transfer pricing is understanding all your functions, your assets, your risk, and to the extent that your risk have changed, yeah, you need to reevaluate your transfer pricing and making sure is it sufficient and is it, you know, reflective of the current risk that is in the system. So yeah, I think that's a very important
And
piece.
we're seeing we do this a lot where what we're finding is the like economic significance of what we're calling supply chain has grown a lot for many businesses. Like when you're thinking about just the overall like pie that divides up the system profit, right? And like traditional IP or, you know, functions, the area we call supply chain can really be a very significant, you know, driver of the economic health of a business.
Right.
And that's both, you know, bad news because they have to get that right. Otherwise, like we have well-publicized examples, you know, of companies that, you know, make a lot of products they cannot sell or make wrong investments, you know, bad calls, and they lose market share.
The auto industry has been a big example,
Yes,
just with the
yep.
chip shortages.
Absolutely,
I mean, there's lots
yeah.
of examples in that
Lots of
area.
examples, and so it's definitely very, very, you know, critical area for company to really invest and deal with. But for us and for, you know, transfer pricing professionals, I think this really presents a very interesting opportunity to reevaluate kind of the attribution of value within the value chain of that company.
So I want to turn to digital transformation, maybe to kind of to round things out here, because I think, Christina, as you were describing the Medtronic case, I mean, these were life-saving devices,
Right.
and we think a lot about intellectual property, particularly in the tech sectors and in life sciences and pharma. But I think, you know, one of the trends that I'm seeing is just how important, you know, digital and technology is for a variety of industries, even outside those traditional pharma, life sciences, and technology. So, and particularly a lot of those investments are occurring within the U.S., particularly for U.S. multinationals, or really wherever the parent company location is. What are some things that we should be mindful of as we think about this big digital transformation initiative, particularly in the context of Medtronic and, you know, what we talked about where taxing authorities are spending a lot more time? For example, one of the concerns that I have for taxpayers is that, are they developing rich intellectual property that should or could be licensed, particularly in an industry maybe that hasn't really used that in their operating models?
Yeah, I think that's a great question. And I guess kind of going back to just licensing of IP, I think one of the things that Medtronic was useful for and that showed us is that you can have this licensing model where your foreign affiliate or your foreign licensee is only performing exploitation of that IP and can still be entitled to a pretty substantial share of the profits. In the Medtronic case, that foreign affiliate, ultimately the court landed on a 70-30 split, which I thought was fantastic and kind of shows that these licensing models are still a useful way to transfer or migrate IP within the multinational group.
And Alex, what do you think in that respect as we see kind of this like intellectual property kind of being developed where many industries, I'm not sure, would have been as focused on those type of licensing models or arrangements, or even the need to, and some of it may not even necessarily be being developed just at the parent company.
Yeah.
There's often contributions across the globe. So how do you manage that from an operating model perspective?
Yeah, I think these like technological developments that Doug, you mentioning, you know, which either is a result of, you know, better access to data and, you know, data science and analytical capabilities, or computational power, or, you know, 5G communication networks. There's a lot of technological reasons why we're seeing a lot of what we're calling digital innovation, digital transformation across all companies. As far as like what does that mean, I think of three kind of main so whats when it comes to digital and what really impacts. One is, for many of our taxpayers that we speak with, this means creating a whole new like commercial offering that is digitally enabled, delivered through cloud, right? Like company that used to sell products now serve solutions or service or digitally enabled, packages of some kind that are priced differently, that, maybe they sell outcomes instead of selling products, right? So just a new commercial offering. Okay, that's one example. The second example of what this creates is a digital channel to sell existing products or services through. A company that used to sell its product, parts, or services through network of distributors or dealers now has a digital portal, with an app on the phone where customers go and buy things. So there's maybe a same or similar offering as before, but delivered through a different channel. And we need to think about like, what does that mean? And does it change the way risk and assets and functions are performed within the group, given there's a new channel of how they sell product? And then finally, the third so what is, for many businesses out there, there is a new internal capability that's being built that is enabled by technology, data, and we've seen numerous examples of that. Pick a business function, right? It could be finance, it could be marketing, it could be supply chain, using digital tools, cloud delivered, just revamping internal processes and driving a lot of value through those. So pick any one of those three, and many companies we see have all three of those going on, and just a lot of opportunity. Will really need to rethink operating model, structure, flows, and transfer pricing.
And I think the lessons that I'm going to take away maybe here in summary is that, first of all, we see that the taxing authorities, as I mentioned, have the benefit of hindsight with respect to these transactions. And I think, to kind of end it where we started is that, yes, this is a life sciences case, but in light of the business and operational changes that we've seen from a supply chain perspective, from a digital perspective, it's very important to understand what that IP is, how those risks are allocated, and making sure that we have contemporaneous documentation to support that and get the transfer pricing right. Because to your point, with the Inflation Reduction Act and another $80 billion that the IRS has, the need for other governments around that are certainly going to be looking for additional revenue as a result of the pandemic, and if we do have a pending recession, I think that these particular areas, and the lesson for listeners is that this is not just for your traditional IP-rich companies. And I also think that there is some positive to be heard out of Medtronic with this unspecified method, that the CPM is not applicable to all foreign licensees, but it's really important to understand the facts. And so hopefully I appropriately summarized the points. This is always an important educational exercise for me in the transfer pricing space. So Christina, thanks for educating me on this. And Alex, thanks for coming back.
Thanks for having us.
So thanks for tuning in to this week's episode of Cross-Border Tax Talks. Thank you, Christina Novak and Alex Voloshko, partners in PwC's Washington National Tax Services practice. I'm Doug McConey, PwC's International Tax Services Global Leader. Stay tuned in 2 weeks for another exciting edition of the Cross-Border Tax Talks podcast.
This podcast is brought to you by PwC, all rights reserved. PwC refers to the U.S. member firm or one of its subsidiaries or affiliates and may sometimes refer to the PwC network. Each member firm is a separate legal entity. Please see www.pwc.com/structure for further details. This podcast is for general information purposes only and should not be used as a substitute for consultation with professional advisors.